So just recently I helped a couple clients do some deals with their 1031 exchanges. So these clients were selling investment properties and wanted to exchange them for another investment property. The way this is done is by a 1031 exchange. What is that? What is a 1031 exchange? Glad you asked. Listen on and I'm going to tell you. So people invest in real estate obviously because they can make money. So the thing that happens is when that person decides to sell that property, they're going to be taxed on the profit, right? That profit is going to incur capital gains taxes. So there are a lot of ways that you can do a 1031 exchange. I'm only going to talk about the ways that as they relate to real estate. I'm a realtor, so that's what I talk about. So first of all, just to make it really absolutely clear up front, 1031 exchanges does not apply to flipped homes. It only applies to homes that have some sort of, or I should say investment that only has some sort of business purpose. So, maybe it's like a warehouse or it's a rental when somebody is collecting rent from their tenants. So what is a 1031 exchange? It is a way that the owner of this business or investment property can defer the taxes on the profit made from that sale of the business or the investment property, and they can actually get that whole entire amount of what they just sold their property for and invest it in the same kind of property, and it's called a like-kind exchange. So keep in mind, there are a whole bunch of rules written into the IRS tax code about how this has to be done, what qualifies, what the definitions are, and what the timelines are. If somebody chose to not roll over their proceeds into the next purchase, they would have to then pay that tax consequences. However, they can keep doing this over and over, selling property, so long as they meet all the rules that the IRS has set forth, and you can keep doing this and you can defer the taxes on the capital gains over the course of several properties. If, however, at some point after, say, you've exchanged like 5 or 6 properties, if that person were to decide to stop and not invest anymore, then they're going to have to pay some exorbitant amount of capital gains taxes because that stuff accumulates over time. So in order to complete a 1031 exchange, you have to use a 1031 exchange company because, like I said, it's very tricky and there are a lot of IRS regulations and rules and all the stuff that you need to follow. So what needs to happen essentially is after the sale of the initial property closes, you have 45 days to identify another property, and it could be one or it can be several. And also from the date of close of the original sale, you have 180 days, I'm going to say that again, to close the escrow on the second property that you're exchanging for. So a couple of other things worth noting is that you can exchange the original property for more than one subsequent property. It doesn't have to just be one. Also, because this is the federal tax code, you can exchange into properties all over the country. It does not have to be in your same county, in your same state. It can be, you're selling a property in California and then you're buying one in California and then one in North Carolina. The other thing to know is that you cannot do a 1031 exchange on your primary residence. So if you want to learn how to sell your primary residence and find out what the tax exemptions are on the capital gains for that, then you should definitely listen to my other video about selling my primary residence and capital gains exemptions.